So you want to make that first real estate investment, but with all of this information out there, you may not be sure on where to start and you might be feeling a little bit overwhelmed. Maybe you're concerned about potentially losing all of your hard-earned money on an investment that doesn't go the way you expected and completely goes in the wrong direction. As a first-time investor, it's not the easiest task to find the right guidance and education, but that's why I've put together this complete, comprehensive real estate investment guide based on the many mistakes I've seen so that you don't have to make these exact same mistakes. Welcome back to the channel. My name is Gianluca and I run a real estate team here in Toronto in the surrounding areas called Grans Haven Real Estate. And today we are unlocking the secrets to making your first successful real estate investment. But before we get started with this video, if you have any questions, feel free to contact me at 647-818-1330 or in the description box right down below, and I'll be more than happy to set up a private time to chat with you one-on-one. Let's dive right into this video. I've compiled a list of the top 10 things to be mindful of in order to have a successful real estate investment. Starting off with number one, we're going to want to define our investment goals. What are we going after? Are we going after a rental income or are we going after long-term wealth building? Potentially, we might actually be going after a little bit of both. So let me describe a little bit of the two. So if we're going after long-term wealth building, we are playing the long-term game with respect to this investment. So a couple things we need to be mindful of. Explore the emerging neighborhoods. Which neighborhoods have that growth potential? Can you catch, a community or specific area right before it pops in order to play that long-term game? Is infrastructure starting to go in this particular area? Is population starting to go in this particular area? So that's if we're going to play, the long-term game. If you want to consider diversifying your portfolio, certain products, might be more feasible in certain areas. So for example, if you have a community where a lot of families are going, maybe we might look into, townhomes, semi-detached homes, or potentially bigger size condos that have more bathrooms and more bedrooms and more space. So that's another thing we have to be mindful of. If we're focusing on rental income, you're going to want to research those tenant demographics and preferences. For example, if you want to purchase, if you're, let's say, in the downtown core and there's a lot of doctors in the area or there's a lot of students in the area, you may want to consider getting into a condo because that's where a lot of the demographic is preferring to be in, and you're going to want to definitely analyze those rental yields and vacancy rates. One of the mistakes I've seen some people make in the past is that, they always go after the purchase price and say, okay, this is what I can get in rental for what I'm purchasing for. But if the vacancy rates are high, which basically means not many people are renting in that area, yeah, you can purchase it for a great purchase price, but you're going to have issues having that place tenanted 12 months of the year or, a majority of that year. Number two, education. This is the biggest thing when it comes to real estate investing. Join those Facebook groups, search up YouTube channels, YouTube pages, YouTube videos, talk to real estate agents and professionals. Education is going to be so key. Whether it be with anything, whether it be investing or even considering your financing options. Sometimes people want to get into a particular product, but they're not necessarily sure how they're going to get a mortgage or how they're going to get particular financing for this product. So understand traditional mortgages, private loans, and creative financing and what the difference is between the three. If you have questions and want to understand those a bit more, send me a message and I can help you out. We're also going to be giving away a free ebook that's more extensive based upon this video. Another thing that's very important to understand too is local regulations. The Residential Tenancies Act. You're going to want to understand your rights as a landlord with respect to your rights, the tenant's rights. If you have to evict them, what are their rights? When can you actually evict them? And you're going to also want to be aware of property tax assessment processes. So for example, in Toronto, we have a recently proposed tax of a vacant property tax in Toronto. So if it was vacant for a certain amount of time, you will pay tax on it. So you're going to want to familiarize yourself with those in particular. Number three, finances. This is another big thing when it comes to property. So budgeting, you're going to want to create a comprehensive budget. What do you want to spend on this particular property? What can you afford? You're also going to have to put away emergency funds for unexpected expenses as well. So for example, if you're getting a fix and flip property, do you have an emergency fund set aside in case those renovations cost a little bit more than you initially anticipated? It's always important to have some sort of a buffer or safety net. God forbid unexpected costs come up. And even with closing costs as well, they're not unexpected, but some people don't always allocate for the expenses that are involved when it comes to closing costs, especially when it comes to pre-construction. So that's that with assessing your finances. And then pre-approval. I want to make a quick distinction between a pre-qualification and a pre-approval. So a pre-qualification, it's more, I want to say, informal and less extensive, kind of gives you a general idea. A pre-approval is more formal, and they start to go into your finances more in depth with respect to what you actually can afford. So a pre-qualification and a pre-approval are not made equal. They are not the same. They are similar, but also vastly different. And then when it comes to getting financing, you're going to want to shop around for those mortgage rates. So always try and obtain the best mortgage rate possible for yourself, because obviously you're going to be saving money in interest. And not only when it comes to saving money, also those terms. Look into the terms and see what is favorable for you. Mortgage brokers, don't be afraid of them, because they can definitely look around and shop the rates for you as opposed to going to a traditional bank. They're both great, but they both serve different purposes. So that's another thing that you're going to want to look into as well. Shop the mortgage rates and see what has the most, or who has the most favorable term for you. Moving along here. Number 4, and this is another thing too that I want to talk to people about, is researching Ontario's real estate market. Okay. This is where, an agent is going to be beneficial to you because they are familiar with certain areas and certain trends. But again, I mentioned it before earlier on in the video. Some may get caught up on just the original purchase price, but we cannot only look at the purchase price. When you're making a real estate investment, we have to look at the full picture when it comes to the full investment. What are the vacancy rates? What are we spending? What's the return on investment? Is population going there? Are they putting infrastructure there? It is super, super important. So the best thing to do is take that historical data and collaborate with professionals like a seasoned real estate agent or a real estate analyst who are familiar with certain areas. It's also important, maybe take a look at some of the employment rates in the area as well. Take a look at some of the infrastructure projects in the area as well. When it comes to infrastructure, a little quick technique that I like to use too, it's not a be-all end-all, but it's something that I like, are Walmarts going in that area. Because when Walmarts are going in particular areas, they have a whole team of people who do this research before they actually put these Walmarts in a particular area with respect to, population, infrastructure, and where things are going. So please make sure you consult the professional and do your due diligence with respect to market research. So that was number 4. Number 5, super simple. Are we going after rental properties or are we going after fix and flip? So rental properties are one of the most common. People buy the properties and obviously they rent them out for, either trying to cash flow the property or banking on capital appreciation. In Toronto specifically, if you're buying a condo downtown, unless you have some sort of substantial down payment, it's very hard to, bank on that cash flow, but you're riding along on that capital appreciation. But it also depends on what area you're looking in. So are we going after a rental property or are we going after a fix and flip? Now, fix and flips. I want to talk about this a little bit in depth. Excuse me. You need to make sure that every penny is accounted for with fix and flips and that you have an emergency fund. Theoretically speaking, they're not difficult to do. You find a property that maybe needs a little bit of work. You go in there, you get your contractors, you get whoever you need, you do the work, and you flip the property for more profit. But you need to do extensive research with respect to how much is the material, how much are the contractors, how much are you getting this property for? Are you getting it for a good enough price in order to factor in, all of these renovation costs and all of these unexpected costs. So by the time you actually sell this home, you can actually be profitable. Take a look at those comps. So if you have a home that, let's say you want to do a fix and flip, that's not in the greatest condition. Take a look at a home that's currently on the market that looks like what you want to turn that home into. So if you have a nice modern home in the area, what are those houses selling for? What are they on the market for? We need to be extensive with respect to, all of our research before we do a fix and flip. Super, super, super important. And always have an emergency fund, because a lot of times I hear people going over budget with respect to the renovation. So if you have that buffer room, you're in a safe position with respect to those fix and flips. Okay, number 6. Everybody always says this: real estate is all about location, location, location. So number 6 is identify a suitable location. Look into those neighborhoods. Take a look at those crime rates. Take a look at the school ratings. Take a look at the community development. What is going on, in that particular community? Follow maybe local news for insights, local newspapers, local Facebook groups. See what's actually going on. Go to maybe some of those local meetings that the city has with everybody in those particular neighborhoods. See what's going on to ensure, that you're making the right investment in a right neighborhood, and understand those local market dynamics, supply and demand. If the supply is relatively high in a particular neighborhood, and you're purchasing this particular property and the supply has always been high over time, eventually when you go to sell that property, you may run into more competition. If the demand is really high in a particular area and you're able to get a certain investment in that area, it's not a bad idea, because people are looking to move to that area. Again, I'm here in Toronto and the surrounding areas, but for example, I use places like Bradford, Barrie, Innisville. A lot of the population is planning on going there because they're typically getting a little bit more affordable than purchasing homes in Toronto. I mean, I know Bradford now is getting pretty expensive, but you get what I'm saying. People are starting to push into certain areas. So if you want to get an investment in a certain area where the population is going to, make sure you do your market research to make sure that the demand is actually there and you're not going to run into any issues, and make sure that the infrastructure and the development in those communities is actually going to happen or is already happening. So that was number 6, identify suitable location. Number 7, build a team of professionals around you. Real estate team, having real estate lawyers on board as well. Make sure you have an agent who is familiar with investments or familiar with that particular location, and he or she has a track record in terms of that particular location. Okay? And seek recommendations and interview multiple agents. Like, see who you jive best with. See who you get a comfortable feeling with. Do they actually know what that area entails, what's going into that neighborhood? Can they actually align themselves with your goals? So that's number 7. Build a good real estate team. Get a real estate lawyer. Discuss those legal fees up front. Always do your extensive research. And if you have to ask a real estate agent for referrals, a lot of times they do have real estate agents that they work closely with, or mortgage brokers they work closely with, or even home inspectors that they work closely with. So don't be afraid to reach out to an agent and interview them and see what they have to offer you. Let's go into number 8, evaluate potential properties. So property criteria, create a checklist of what you're looking for. Be open to properties that may need cosmetic improvements if that's something that you want to do. Kind of have a criteria based upon what you want to get into. Do you want to get into, a townhome? Do you want to get into a semi-detached? Are you able to get into a detached home? Or do you want to go into commercial? You want to go into an office space, or, potentially a multiplex with 5 or more residential units that people can go into? Kind of have a gauge of what you're looking for. And if you don't know what you're looking for, consult a real estate agent and say, listen, these are my goals, either relying on capital appreciation, making good rental income, and talk to them and see what they recommend for you. Some people don't always necessarily know what product they want to get into. They just kind of have an idea of what goal they have in mind with respect to real estate. And obviously a lot of it is building wealth for themselves, building generational wealth, and they want to learn how to go about it. So that's evaluating potential properties. I also want to go into comparative market analysis. So CMAs, a real estate agent will do this for you. Understand what's going on in the market from a property to property perspective. So for example, if you're going into a particular market and you want to purchase a condo, but the condo market there is so oversaturated, and those prices aren't necessarily going up over time, do you really want to get into a condo in that neighborhood? It all depends on your goals. Maybe you want to live in that neighborhood one day and you want to buy it. There's nothing wrong with that. But, really look at the comparative market analysis, and look at the comparables to see if what you're getting into is actually a profitable investment. And a real estate agent can do this for you, or you can consider hiring, an appraiser to kind of see if your property is feasible long term. Financial analysis, number 9. Okay, cash flow analysis. You want to account for all your expenses. Anytime you're making an investment, you want to go over every nickel and dime, because every nickel and dime matters. It's not like, this is something that we're moving into right away, or maybe it's something you want to move into down the line. That's completely fine. But whenever you're making an investment, you want to be as diligent and as profitable as possible. So make sure you account for all expenses that are involved in that property. And again, a diligent real estate agent can help you and work alongside you with that there as well. And calculate the debt service coverage ratio. For example, let's say you buy a property, okay, and you can make $3,000 a month in rent, okay? And let's say your mortgage is $4,000 a month. So now you're putting in $1,000 a month, plus you have your property taxes. And if you're getting a condo, you also have your maintenance fees and unexpected costs for repairs or whatever. Is this investment worth it in the long term based upon the capital appreciation? So you always want to go through all the financials and make sure you're getting a good return on your investment. And last but not least, let's go into number 10, your due diligence. If you're buying these properties, if you're doing property inspections, attend those property inspections personally so you know what is going on. Maybe you might catch something that a property inspector may not see and say, hey, can you look into that for me just in case? And when you're accompanying a property inspector, you're also getting that education on your home based upon certain mechanisms or certain structural things that are happening within that home. So it's good to know things that need to get done, things that may need to get done in the future, and just understanding what's going on with that property in general. Another thing that I want to go into that's super, super important is zoning and legal, I don't want to say concerns, but zoning and being curious about what's going on legally with that property. If you are purchasing a property and let's say you want to turn it into a duplex, you want to do a basement apartment, you want to build on that property, make sure you ensure that it complies with either the current zoning or what you want to do in the future is going to comply with zoning. You do not want to have any issues with the municipality, because if you already do work and it doesn't comply with zoning, most times they're going to either make you revert it, or there's fines, or there's, other things that you have to be mindful of by not complying to the zoning of that area. So super, super important. And if things were already done to the property, make sure that those additions or any repairs that were done or anything that was done to the property, make sure it already complies with zoning. How do you do this? You simply just call the city. Call the city and say, listen, this is what I'm planning on doing with the property. I've had clients do this in Barrie where they'll buy a townhome or they'll buy a detached and they'll say, listen, here's the address. I want to do a basement apartment. Am I allowed to do this based upon where this particular property is? So those are my top 10. I'm going to reiterate them in short form before we end this video. So number 1, define your investment goals. Number 2, education. Number 3, assess your finances. Number 4, research Ontario's real estate market. Number 5, choose your investment strategy. Number 6, identify a suitable location. Number 7, build a real estate team. Number 8, evaluate potential properties. Number 9, financial analysis. And number 10, do your due diligence. What I'm also going to do for you as well is I'm going to put all this information in an extensive ebook for you that you can download in the description box right down below, or just send me a message and I'll be more than happy to send you over that ebook. Thank you for joining us today on how to make your first real estate investment. Don't forget to hit the subscribe button and smash that notification bell so you're always the first to know when we drop new videos. And remember, your journey to a new home starts with knowledge and peace of mind. Until the next one, have a good one.